Hello students, today we will learn the illustration number 2 under the transaction value computation. See the illustration number 2. Mr. Prashant Shetty, a dealer in Mangalore, entered a contract with the supplier in Mysore to deliver machinery along with essential accessories. From the information, determine the total amount of GST payable under section 15 of GST Act 2017 composite supply. Under that, price of machinery excluding GST 5 lakh, cost of installation charged separately in invoice rupees 25,000, cost of insurance charged separately in invoice rupees 17,500, warranty charges charged separately in invoice rupees 14,000, cost of transportation charged separately in invoice rupees 2,500. Other information, cash discount at 5% on price of machinery was allowed as per terms of contract since full payment was received before the dispatch of delivery. Accessories were supplied essential along with machinery for rupees 10,000 and accessories are charged for the tax at the rate of 5%. Applicable GST rate on machinery at 18%. So with this information we have to compute the total amount of GST payable. So here they have given price of machinery as well as some of the expenses. So we have to find the transaction value first. So we'll see the question. Mr. Prashant Shetty, a dealer in Mangalore, entered a contract with supplier in Mysore. So Mangalore and Mysore within the state Karnataka. So here we have to take CGST and SGST. So the tax liability will be CGST and SGST because the buyer as well as the supplier is within the state Karnataka, Mangalore and Mysore. So they entered into a contract to deliver machinery along with essential accessories. From the following information we have to compute the GST payable. So here they are entered into contract for the delivery machinery along with the essential accessories. So it is of composite supply case. So in the case of composite supply, the tax rate applicable will be the tax rate of principal supply. So that is nothing but machinery, tax rate of machinery we have to apply while calculating the GST payable. So now we'll see the question. Price of machinery excluding GST is given. So in order to find the transaction value, we have to take the price of machinery first. Selling price or cost of the machinery we have to take. So the price is excluding GST given. So we need excluding GST also. So directly we can take 5 lakh. So if they give including GST, then we have to exclude that GST amount we have to deduct. So price of machinery excluding GST is given. So directly we can take 5 lakh. So to calculate the transaction value or we are calculating the transaction value for computing the GST payable. So in the prices or in the any of the prices of our materials or machinery, the GST should not be included. So we have to exclude the GST paid. So firstly we have to take the price of machinery. Next we have to add all those expenses one by one. So the first one is cost of installation. Cost of installation charged separately in invoice. So this one we have to add. These are the some of the expenses which are not included. So charged separately. So we have to add cost of installation. Cost of insurance charged separately in invoice. So these are the inclusive expenses not included. So we have to add. So these are charged separately. Warranty charges charged separately we have to add. Cost of transportation charged separately we have to add to the price of machinery. So these are the inclusive expenses not included. So we have to add. It is relating to the machinery. Installation or insurance, warranty charges, transportation, all these are expenses relating to the machinery. So we have to add to the price of machinery. So these are the inclusions we have to add. Next there is other information. Cash discount is given. So the cash discount is given at 5% on price of machinery was allowed as per the terms of contract because full payment was received before the dispatch of machinery. Before the delivery of machinery, full payment is received. So they have given cash discount of 5%. So this 5% discount we have to exclude. We have to deduct the cash discount 5%, that is on price of machinery. So 5 lakh into 5% we have to deduct. Then accessories were supplied accessories are supplied, so this is the essential. So in the essential means it is a composite supply. Here they have directly given composite supply. If they don't give composite supply, then with the word essential accessories we have to assume it is a composite supply. So accessories are supplied along with the machinery which are essential for the working of this machinery. So the value of the accessories are 10,000. So this 10,000 we have to add. It is also one of a supply along with the machinery. So we have to add 10,000 to the price of machinery. And accessories are charged at 5%. For this accessories, tax rate is 5%. And GST rate on machinery is 18%. So in the case of composite supply, we have to take the tax rate of principal supply. So here accessories and machinery, the main supply, principal supply is machinery. So the tax rate of machinery will be applicable. So 18% GST we have to take here. So here among these two tax rate, we have to take the tax rate of principal supply, that is 18% tax will be applicable for the CGST and SGST. So 9% each we have to take while calculating the GST payable. So now write the heading solution, computation of transaction value. So 3 column, particulars and 2 amount column. So to calculate the transaction value, firstly we have to take the price of machinery. So excluding the GST, price of machinery is 5 lakh. So 5 lakh we can take directly. Next we have to add the inclusions. Right here add inclusions. So write one by one the inclusions, which are the inclusions not included. So these are the inclusion which are charged separately. So we have to include cost of installation, cost of insurance, warranty charges, cost of transportation. So price of actual price of machinery is this. So along with that we have the businesses dealer has incurred some of the expenses. So these expenses we have to include. It is also relating to a cost to the machinery. So after adding these expenses, there is a one more cost, that is the accessories also supplied along with the machinery. So this 10,000 also we have to add, accessories supplied along with the machinery 10,000. So the total inclusions is 69,000. So if you add the total, it comes to the total cost, it comes to 5,69,000. Total it comes to 5,69,000. After that we have to deduct the less exclusions. So under exclusions we have only one item, that is cash discount. So that is at 5% is calculated on price of machinery. So on price 5 lakh we have to take 5%. 5 lakh into 5% is equal to 25,000. So if you deduct, the transaction value is equal to 5,44,000. After that we have to calculate the GST payable. So write the heading computation of GST payable. So under that write intra-state supply within the state or a intra-state supply. So that is in bracket write computation of GST payable. So computation of GST payable, under that write intra-state supply. It is a intra or within state supply, intra-state supply. So in the case of intra-state supply, intra means it is a Karnataka, within the state Karnataka, supply is made within the state Karnataka. So write CGST, SGST. So that is 5,44,000 into 9%, 5,44,000 into 9%. So it is equal to 48,960 each. So total GST payable 48,960 plus 48,960 is equal to 97,920 is a GST, which is a revenue to the Karnataka government for the supply made within the state of Karnataka. So this tax revenue will be collected by the Karnataka state government. Total GST payable.